it's one of those types of narratives that you can obviously put a lot of DVO1s into play, and you'll see a lot of disasters appearing on your screens, or you can have a few DVO1s in play and obviously things are a little bit clearer. But for example, we've just bought some bonds off the 3031s for some DVO1 rebalancing, and it's done well. We've managed to make a little bit of a gain up to 3s, and we've made some money off it. So it's a little trade, and I'll highlight it just here for you in a second. I'll just grab the chart. Here it is here. It's what we're trading, by the way, guys, is the red line against pretty much everything else. When we trade the DVO1 rebalancings, we're trying to trade big wide spread divergences. The bigger the spread divergence, the stronger the DVO1 starts to become for us. And you know, when we start to recognize the standout areas where the red is way above everything else, or the red is, and again the red is way above everything else here. So I start buying into these swing lows here in terms of a DVO1 rebalancing. I haven't touched on DVO1 rebalancing for a while because not a lot of people are using it. I think Nessie uses it. I don't know if Reeve uses it, but I know Nessie uses DVO1s in some of her screen shots that she's talked about in the past. But I don't know how many people still use DVO1s. But it is a nice, easy, short-term trade that you can do for money. Just a quick scalp if you're looking at a quick scalp trade, get some cash into the bank account. And you know, there's been quite a lot of these DVO1 trades this morning. You can see, for example, into the top edge here. If I zoom in a little bit into the top edge, do you see the red line making a new lower low against everything else here? That's the sell trade, and that sell makes some really good cash away from that top line price. And you know, this little sell trade here with the red line making a lower low again into this prior rejection candle here, nice sell off and a reasonable profit. You can see the bonds actually just went nicely to the upside for us there. On the right hand edge there, you can see we've just had a good lift off on bonds up to the 0.6s. So buying into the 31s, you can see, has already paid out a very handsome little bit of a profit on us. Thank you very much. So you can see it's a powerful little indicator. It's not the tidiest. It's not meant to be. It can be tidy, but obviously it's all about just recognizing that there's a DVO1 rebalance taking place at certain key swing highs and key swing lows. And obviously this is the idea of the algorithms. This is a very algorithmic trade. It's not a retail trade. It's not a manual trade in that sense. It very much is just algorithms. What they're trying to do is they're trying to get all of these lines to line up beside each other. And I say, what? Yep, that's what they're trying to do. They're trying to get all of these lines to sit on top of each other, and they're constantly micro-adjusting bond prices to achieve that end. So when we see that it's well out of line, there's going to be bigger DVO1 buyers pushing it back into line again, and that's going to give us a quick money opportunity to make some cash. Now, isn't it interesting that the trade that I was talking about, which was trading at 1s and 2s, is now trading at 9s? You can see that just even talking about it, it's went up another 6 ticks in profit. That's nearly $200 in profit just since we started talking about the trade. And yeah, great trade and a lovely bit of outcome just in here, guys. Now, you might be asking about this idea about all the lines sitting on top of each other. Well, we'll see more of that if we zoom out a little bit. Let me just get rid of the bond price for the time being, and we'll zoom out a little bit, and you'll see that there are periods where these lines separate significantly, and there are periods where these lines sit really quite tight on top of each other in certain areas. And obviously on a macro scale basis, you can start to see the DVO1s starting to scream at you. So for example, you can see the DVO1 rebalancing is a heavy trade up here. Obviously in that type of environment there, we're going to be buying some big numbers of treasuries for a DVO1 rebalancing into that storyline up here. So we're going to be very heavy long during that type of phase there. Now obviously we've got to be mindful of the shape of the markets and all these kind of things. But when the bond comes in, you can see that buying into bonds there with a big rally in bonds over that same period, which is exactly what we would have expected to see because of the DVO1 adjustments. So DVO1 adjustments are a very big feature of bond trading. And they're a very big feature of bond trading. And you know, these are automated structures. These are short-term structures. They're not macro structures per se. you can trade DVO1s off a 1 minute chart and get a very good feel for the market. You can see that little bond buy has went from 1s to 12s since we've been talking about it. 1s to 12s. That's now a 10-point move, $300 profit since I mentioned it. And you can see the power. So that was a right-hand edge, almost a right-hand edge call. We were only a couple of ticks off the bottom price when it happened. And you could have joined me on that DVO1 as well. You could have joined in from the zeros. So we can see this as a good idea. We can see this as a very, very solid part of your jigsaw puzzle piece. And obviously in line with that, the likes of max buying in terms of curve trading as well, it makes a lot of sense to be in that long trade at the bottom edge. If you look at Max had added liquidity at the low price here, had started to buy into the low price here, and obviously that Max liquidity is the trade we've just taken for that buy trade up to a high print of 12s, 13s. And we can see that there's a very nice opportunity to grab a little bit of cash in line with this Max sell trade that we're getting off the curve as well. So curve plus DVO1s in line at that trade, curve plus DVO1s, and a very, very nice trade outcome. Thank you very much indeed. Well, it depends on your time frame, Paul. We talked about why oil longs were very, very powerful. We talked about why they were very, very good. It doesn't mean you can't sell oil, but you're selling oil as a scalper, right? So you're selling oil as a scalper, and you're swing trading long oil. And that's just simply the way it is. I mean, I sell oil all the time on upticks in a bullish market. I've been selling lots of oil in upticks in a bullish market, but you don't have to do that. You can simply, decide to trade in line with macro when the micro sets up in line with it. And it means that you've got periods of time where nothing's happening because you're bullish short term, bearish long term. So you start to say, well, I'm not going to trade. I'm not going to try and scalp the markets. It's not my style. I don't like it. I'm not very good at it. My execution isn't very strong. Because if you're going to scalp, it's all about execution, isn't it? Scalping is all about price. It's got very little to do with volume and almost everything to do with price. So scalping is a price story. And if you're bad at price stories, if you're bad at timing your trade properly, if you're bad at execution skills, then scalping isn't really going to work for you because you're giving away too many ticks. To be a good scalper, you've got to be accurate to one tick, haven't you? Because a lot of the times you're getting stops at break even after 1 or 2 ticks are already in place. To be a good scalper, you've got to be absolutely pristine perfect. And if you're not pristine perfect, scalping isn't for you just yet. It's better to be more of a swing trader, to give yourself a little bit more wiggle room in your execution skills. So yeah, absolutely, you can sell oil all you like, absolutely no problem. We can see we've had a very, very strong oil upside. We'll talk about that in Classroom this afternoon when we talk a little bit more about macro narratives. Macro narratives.